Welcome to HSBC Global Viewpoint, the podcast series that brings together business leaders and industry experts to explore the latest global insights, trends, and opportunities. Make sure you're subscribed to stay up to date with new episodes. Thanks for listening, and now on to today's show.
Welcome to another episode of HSBC's Perspectives series. My name is Simon Williams, and I'm the Chief Economist for HSBC Middle East, and I'm delighted to be talking to Ben Simpfendorfer, Chief Economist for Oliver Wyman. I'm covering the APAC region. Ben, you and I have known each other since we both lived in Damascus back in the day. You're still the only Westerner I know who's fluent in Arabic and in Mandarin. You wrote the first ever serious book I read about growth in the new Silk Road, that relationship between the Middle East and Asia. For those that haven't been following that dynamic as closely or for as long as you have, can you sketch out for us what's happening in that economic relationship, how you're seeing those ties between Asia and the Middle East develop?
Well, it's a super exciting relationship, but it has 20-year roots. So China rediscovered the Middle East back in around about 2005. China entered the World Trade Organization. All of a sudden, started to export huge amounts of consumer goods that the Middle East wanted. And the Middle East had cash to spend because oil prices hit record highs. And so the two all of a sudden rediscovered each other. Commercial ties grew closer. But it was mainly about consumer goods and oil. The last 5 years has seen a dramatic change. Call it phase two, if you like. We've moved beyond goods into the exchange of capital, talent, technology. The non-oil diversification strategies of the Middle East, but the Gulf states in particular, have just opened up a whole new range of sectors for Chinese companies to get involved. And it's taken the relationship to a new level.
Can you put some numbers around that? Perhaps just give a sense of, I'm very aware that the strong government-to-government backing for this economic relationship, it feels like a relationship that's kind of coming of age.
Well, it is. So look, trade has gone from 20 billion to 100 billion. It's a powerful dynamic in its own right. But you look at private market deals. Over the last 18 months, we've seen nearly 60 deals that's had either a China or Middle East partner on at least one side. Everything from capital injection into Kulab, a UAE startup. You had Legend Capital. You had Bombardler involved. But equally, just the number of flight connections between the two regions. You can fly direct from Dubai to any number of Chinese cities now. So a lot of change.
So it's people flows, trade flows, capital flows. And again, that government framework as well feels really important. It does feel like there's strong buy-in from both sides for this relationship developing further.
Yeah, it does. And it's a piece that people often miss. So over the last 3 years, I'm meeting regularly with government officials, with regulators, with association heads who aren't just traveling once a year to the region. They're there every quarter. Some of them are there every month. Hong Kong Exchange just signed a recent agreement with Saudi Arabia's Tadawul, the local stock exchange market, to do more dual listing between the two markets. Hong Kong's HKMA signed an agreement with UAE's central bank around recognition of cross capital flows between the debt markets. And it is that constant exchange is building the infrastructure that allows the private sector to start to get involved.
Something I'm very conscious of. I think about the delegations that we receive in Dubai, not just the seniority of those delegations that are visiting, but also the expertise that they now have in what's going on. The number of calls that I now have with institutions in Asia looking to invest in Middle East financial markets as well as the FDI. The politics though that surround this. I don't want to get drawn into the broad geopolitical discussion, but obviously the Middle East has got close security relations with the US. Those tensions between the US and China are running deep. Yet I've heard you argue before that actually that shift in the global backdrop was an accelerant rather than an impediment to that deepening economic relationship.
Well, it is indeed. Look, US-China relations are clearly tense at the moment. It's harder than ever for Chinese entrepreneurs, companies to put money to work in the US, so they're looking for alternatives. The Middle East is a natural alternative. The GCC at the moment, again, because of the amounts of money that are flowing into that non-oil diversification program, Saudi Arabia's Vision 2030 being an obvious example, opening up new opportunities for Chinese firms that may not have existed previously because those same firms would have been looking at deals in the US instead. So it has acted as an accelerant. But equally, China doesn't have military ambitions in the region, not to the degree, say, that the US does in terms of stationing troops and similar. And so there's less opportunity, if you like, for conflict around that particular subject.
And a big part of the Middle East story, certainly in the last year or so, has been its ability to navigate those political divides, to maintain good relations with the US and with China and with Russia and Europe too. If we could look at some of the specifics, the sectors where you've seen there's increase in trade flows and in capital flows as well. Energy is one that I've heard you talk about, and China in particular as the destination for so much of the region's hydrocarbon exports, but China also leading on renewables development. How do those two dynamics fit together?
It feels like they don't, yet they do quite well. Look, China will remain a big buyer of energy from the Middle East, and that in turn is driving deals. So you see Chinese players involved in the Jubail refineries in Saudi Arabia. Equally, the Kuwait petroleum company recently made an acquisition, released a share of a Chinese chemical company, Wanhua. So the conventional sector, at least, there is a lot of money that's still flowing between the two countries and deals that are being done. But as you say, both regions have ambitions to develop their renewables sector. China is a leader in clean energy production. It produces or accounts for between 40 to nearly 100% of global manufacturing capacity of a range of clean energy products. These are products that Saudi Arabia wants. So if you are working at the Oxagon project in Saudi Arabia, this is the leading industrial project, part of the bigger NEOM Giga project. You'd be seeing delivery of enormous wind turbines, 100-meter longs, 250 of them arriving over a period of 2 years. They all come from China. So that at the same time is drawing them, the two countries, closer together in terms of where future energy sources lie.
But despite the pace of that renewables development in China's going to stay a big market for Middle Eastern oil exports.
Oh, absolutely. China will remain fundamental. So even as China transitions towards clean energy sources, it needs oil, not just as an energy source, but just in terms of its manufacturing inputs. Don't forget, it's 40% of the world's manufacturing capacity. That's an enormous source of oil demand and will underpin the relationship.
Obviously, huge focus in the Middle East on technological development. The Middle East determined to be at the cutting edge, not just using cutting edge technology, but increasingly producing its own as well. It's a more complex relationship because of the geopolitical backdrop. Can you talk us through what you're seeing there?
So there's lots of opportunities for them in certain sectors. So let's say advanced material development, where I know Saudi Aramco, for instance, is invested into R&D facilities here in China. Equally, biopharma is another opportunity for the two markets. I was recently in Riyadh at the garage, a hardware accelerator startup, probably well known to yourself, sitting next to a Chinese biopharma entrepreneur who has facilities here in China, is looking to build a second facility outside the country, not the US, of course, because of geopolitics, and is exploring Saudi Arabia as an opportunity. You can imagine a world where the R&D conducted in Saudi Arabia by the Chinese biopharmaceutical group could then export vaccines or other products into Africa or into regional markets. So that's exciting. Where it's challenging is around topics like artificial intelligence. And clearly that is a subject the US sees as a national security issue, and will find it perhaps challenging to see Middle East players deploying Chinese AI and could cause some tension.
But take you back to that point you made about Middle East as an export point. The idea of the economic diversification program, a lot of it is in its simplest form, the Middle East going from being a consumer of goods to being a producer of many of these items, both for domestic use and for exporters as well. Now, how successful is the Middle East being in drawing Chinese firms, Asian firms as a whole into their diversification strategy? And how much substance is their idea of the Middle East as an export point for Africa, to draw it more fully into global supply chains?
So there's huge opportunity, but it's still very early days. So investments are going in, but more often they're targeting the local market. Where the Middle East could perhaps play a stronger hand is selling itself as a platform to the rest of the region, selling itself as a platform for Chinese manufacturers that not only want to set up export manufacturing capacity, but also after-sales service. So putting engineers on hand so that when you do sell products into North Africa or other regions, then you can follow up with your after-sales service. You can follow up with your business development people using the region as a headquarter. I mean, don't forget that a 6-hour flight from the GCC lie 800 cities with a billion-person population and $8 trillion worth of GDP. That is an enormous prize for Chinese companies that they're not yet fully capturing yet.
Absolutely. In a time when certain areas of China's economy are slowing, to have a market expanding in the way in which the GCC is and offering the kind of new productive opportunities that it represents, that's clearly compelling. Could we just touch on some of the country-specific issues? It always strikes me that there are two quite special relationships between the Middle East and Asia, between the UAE and India, and between Saudi Arabia and China. I don't know if you agree with that, or if you could perhaps sketch out the broader landscape on a country level.
Absolutely. So the India's relationship with the Middle East is too often overlooked because the China's relationship seems so overwhelming at this point, and yet the historical ties between the two countries are much stronger. UAE has you can correct me, an 8 million population, but the Indian Ministry for Foreign Affairs just the other day said there's 3.5 million Indian nationals in the UAE. The UAE is one of India's biggest foreign investors. Where are many of those investments coming from? Often from Indian-owned businesses. As supply chains shift and de-risk away from China, India is a natural destination for many manufacturers. And that creates opportunities for the big UEA players, whether it's DP World or some of the other developers of industrial parks, to look at opportunities in India. So those ties will only strengthen.
And between China and Saudi, and perhaps more broadly, and the ASEAN economies are very, very much in your focus when you're looking at the Middle East.
So ASEAN should be a natural destination. Many of them are Muslim economies. Many of them have a shared history with the Middle East, whether that's in terms of trade or even thinking about pilgrimage tourism. Certainly, the GCC, UAE and Saudi Arabia in particular have been exploring opportunities in Indonesia. There are some real viable opportunities there. DP World is very active across the region, has nearly 18 ports across Southeast Asia. But there's more work to be done. I think perhaps there's been a degree of perhaps over-indexing on China, and perhaps there needs to be a little bit more rebalancing back into ASEAN, and given its large domestic markets, but also, to be fair, some quite exciting technology startups.
And Egypt, all the focus is about the relationships developing with the Gulf, but the potential that Egypt represents, given its geographical location, it points at its economic development cycle. Suez Canal. Where does Egypt fit in to that new Silk Road of yours?
Egypt is super exciting for a number of reasons. Chinese construction companies have had a long presence there, still very active, of course, as you would certainly know better than I, building out the new administrative capital that I know you visited on a number of occasions. But equally, Chinese manufacturers have a strong presence. I was chatting with the regional managing director for one of China's biggest appliance manufacturers the other day. They've just opened up a factory in Egypt. Why? Because of the country's FTA with the rest of Africa, and the ability to export product into neighboring markets, but also the fact the engineering talent is readily accessible. Some of the big Chinese social media companies that many of us use every day, buy products from every day, they have software engineers based in Cairo, again, because the talent is readily accessible. So the China-Egypt relationship, again, super exciting, often overlooked because it's a little bit less flashy. There are perhaps fewer conferences, but there's a lot happening on the ground.
So you've been following this story for a long time, and you're talking about the potential and what lies ahead, but that does make it clear that it hasn't already happened. It hasn't been realized. Why is it taken time for this potential to be be fulfilled? What are the challenges that still need to be overcome for this relationship to become all that it should be, for that integration to really deepen?
So there is a long way to go for a number of reasons. The first is that it is a complex relationship. We're talking about multiple countries rather than a single market such as the US or the EU, right? So it means for a Chinese company moving into the region for the first time, opening up a headquarter in Dubai, they're then having to develop business across 2, 3, 4, 5 markets within multiple time zones. So it does take time. But the real opportunity is in the partnerships and the platform. So it's, for instance, talking about biopharma earlier, it's a Chinese biopharmaceutical player tying up with a Saudi Arabian, maybe venture capital fund or other, setting up facilities in the kingdom and then exporting that product into third markets. It could be Algeria, it could be Nigeria. That is an exciting proposition, but it's also a complex proposition. It's not straightforward to build those sorts of structures, but they will come, and they are super exciting. In many respects, they best echo the old school Silk Road trading format. Maybe that's the world we're moving towards.
Perhaps as a closing thought, what's the key advice that you would give to new entrants to these markets on both sides?
So it's all about building relationships, finding the right partners. So we co-host with the World Economic Forum a series of China GCC roundtables. We've held them in Davos, in Riyadh, in Tianjin. The CEOs, many of them who'd be familiar names to you, emphasize that again and again and again. It will take time. It's all about building bridges. It's all about building trust. But we may also be surprised how quickly we move on from that. These conversations have pivoted surprisingly quickly towards let's get deals done. Now we've got the right partner, let's move forward. So hopefully over the next few years, we're going to see rapid change. But if that was the one message I'd leave you with, it's you've got to be on the ground. You've got to be building relationships.
Ben, thank you very much indeed.
Pleasure.
Thank you for joining us at HSBC Global Viewpoint. We hope you enjoyed the discussion. Make sure you're subscribed to stay up to date with new episodes.